Thanks for showing up. I'm delighted that there's more than 4 people here. My goal for today is to have the most boring slides, but the most engaging discussion. I'm not talking about anything in particular except my own wonderings about the space. I've been part of the space for about 4 years now, and selfishly, I'm transitioning from a position that I've had into something new, and I'm trying to figure out what I want to do next. And so, being a big fan of prediction markets and trading and betting, I thought I might tap into the wisdom of the crowd by being here and trying to engage this audience, particularly with what's new and ideas. So I think it's fair for everyone. Your background informs your bias. So my background certainly does that. And I'll go into a quick intro for me. But I really want to make sure that we have an open discussion. So trying not to do a presentation where I present information to you, but trying to engage the audience with questions as we go through things. And I've got some themes that I want to talk about the space. And I don't want to hear myself talk. I want to hear people share with others and bring ideas to this group that we can share and talk about and think about some of these themes, then talk about some specific projects, and then some Q&A at the end. So if I can have one ask of this group, is that everybody try to contribute at least one thing to this discussion, like say something. Like don't leave without saying something to the audience. So my own background, I've traded for about 25 years. I traded options on commodities on the trading floors in New York, Chicago, and London. Then I founded a company called InTrade, which was a prediction market. It got a lot of press and visibility from the presidential elections in the United States. We pivoted that to trade sports, which was person-to-person betting. And then in the United States, and I'm a US guy, had to protect myself from regulatory overtures, and we became a daily fantasy sports site. That didn't work. But it was probably one of the most fantastic things that happened to me because it introduced me to crypto. And when you're introduced to something completely new that solves specific pain points that you have in your real life and part of your real business, you know that you're onto something, probably something really important. For us, we were having trouble with banking, with financial processing. Somebody said, hey, one of our larger customers said, have you ever interacted with the blockchain or Bitcoin? Can I make a deposit with Bitcoin? And the epiphany for me is that customers were now willing to use Bitcoin to make deposits into the system and pay the fees to do that. So instead of using a credit card where we would pay 2.9% plus 30 cents to accept the deposit, so a customer would deposit $100, we would only get $97, and when they cashed out for $100, we would then pay $103 to give the money back. Now we were accepting $100 worth of Bitcoin. Coinbase would say, yep, 98.62. We would give the customer 98.62, and it transferred that huge cost from us paying the fees ourselves as a centralized entity to the customer willing to do it. Why was the customer willing to make that payment for us? The extra convenience, the privacy, the speed of transactions, not having to send, and this is 2003 to 2012, not having to send not having to send a paper check to the company. 2012, we had about 40 million US in customer deposits, none of it from credit card. So if you think about, and we processed in Ireland, and 80% of our customers were US. So think about the hurdles, for people to participate in the system, how important crypto might ultimately be. Was contacted by Joey Krug from Augur in 2015. The story that I like to tell that he doesn't like when I tell is having first met him, we went to a famous bar in Wall Street called Delmonico's, and I wanted to buy the boys a drink. And Joey's like, oh, I'm not old enough to drink yet. And he was 19 at the time, so that was he and Jeremy. And then we met Jack Peterson. We ended up forming a company called Augment Partners, and hopefully you see the cleverness here, augment to augment Augur. And our original pitch was to build things on top of Augur. You might remember 2015, 2016, Augur first coming to be, and one of the earliest ICOs at the time. The software, we thought would be a lot more progressed than it was, and we had a head count and a burn rate, really practical things for businesses as they get started to try to grow. Things were taking a lot longer than we thought, one of the themes that we'll get to in a minute. We ended up pivoting and building on top of ZeroX. We thought that if you could allow people to trade on things that resolve in the future, you could probably talk to them by allowing them to trade things that you resolve instantly, an instant swap. So we were going to talk to the same people in some ways, so might as well build an instant exchange. Non-custodial, I think at the time non-custodial wasn't really a buzzword in late 16, early 17, but it's become one. We built Paradex. 6 months later, we sold it to Coinbase. And that's still a Coinbase property now. I left the company about 4 weeks ago, and now I'm thinking about what to do next. So can I take some questions now before I get started? I'm trying to get this audience engaged. Sure.
Any thoughts on what you want next?
No. The question was, any thoughts about what's next? For me personally, I'm not sure. But I have a tremendous amount of love for Augur. It's my origin story in crypto. I still think it might be the best adoption use case. So I'm delighted to see projects like Gesser, start to build things on top of Augur like we had intended to, or build things adjacent. So if I have another project in me, I want to hit the bullseye. So I'm thinking about that. Yannick.
Seems like a lot of the roadblocks, if we go through what you've done in the past, have been regulatory.
Yes.
As you think about what's next, it would be helpful to also get your perspective on how to approach the regulators.
Yeah. So the question is about regulatory and thinking through the roadblocks that I just described for our business of in-trade, trade sports, even Paradex when we sold it to Coinbase. Regulatory is one of the roadblocks. I think governments are taking a very, very slow approach intentionally to see if it's worth, really stomping on liberty and freedom right now, or that can wait a little bit if there's going to be natural compromises built in. Not sure, but regulatory remains one of my biggest concerns. And I'm an old guy, so I have an infrastructure. I don't really want to leave the United States and stuff like that, even though it might be easier in other places. But that is definitely part of my personal calculus. So as I said, I'm an old school practitioner. I'd like to say now, I used to think that good businesses need to make money. But I think the last 2, 3, 4 years in crypto have kind of challenged that assumption, and I'm willing to allow that assumption to be challenged. And then, as I mentioned, I really do want to tap into the wisdom of this crowd for inputs, feedback, ideas, and debate. Any questions so far? Or comments, or anybody want to introduce themselves? So some discussion themes that we can talk about, and these should be easy for people to have ideas about. Sustainability has probably been miscalculated. There are some projects that are running out of room, they're running out of money. Some Zcash development fund reiterations, other projects is coming to the end of the line. I saw a tweet recently that said, hey, any open finance projects that are about to close the doors, contact me before you do. So obviously some of these sustainability themes, have probably been miscalculated. Things are taking longer. Why are they taking longer? There's, at least 3 different reasons. Software isn't as good as it could be. Regulatory problems we spoke about, and then execution. Maybe the UI, UX isn't great. Maybe the code doesn't work. Maybe there's another DAO hack right around the corner. We don't know. And then another theme I wanted to touch on is the right model. Is a business plan better than a white paper? I don't know, you didn't need a business plan to raise a lot of money a few years ago, but maybe you do now. Good article in Nifty, NFTY newsletter, composable, extensible, interoperable. Where do you need to be on that spectrum to find the sweet spot for, what might be a successful business? And I'd also say that a successful business might be measured in a different way than we used to think. And then some of the compromises that we have to talk about, I'm trying to buzzword this centrally versus decentralized, centrally versus decentralized financial. Where do you need to be? What compromises can you make? What compromises from an operator perspective and what compromises are acceptable from a user to the project? And then this whole concept, which I think ties into business models and things like that. If you don't have a business model yet and you're trying to figure out what that business model may be in the future, where do you sit on the spectrum of I'm trying to make a shit ton of money versus I'm trying to do something really good for this community because I believe in it and it's probably great for my kids. So just to talk about sustainability and return on investment, any VCs here? Great. So at least 3 perspectives we can get. What do you think about in terms of sustainability? When you evaluate a business, do they need a 1-year burn, a 3-year burn, or a 5-year burn? Like, how do you think about that, if I can put you on the spot?
It depends if it's very cheap or if it's very... We invest usually in seed capital, so we usually...
Right there.
It's for recording. It's not for the sound. So please use it.
Usually we invest in companies that don't have too much data, so we usually thinking about the potential and usually the kind of business that they're doing. So
does the business need to make money tomorrow or at the end of their business plan? Like if they have a go-to-market that's 12 months.
They have to be validated. This kind of business model, usually in Spain, we invest in business models that have been validated in the United States. So usually we look for validated business models.
Got it. Anybody else want to join into that? Because, yeah, if we can.
Yeah, so we invest in, can you hear me? We invest in tokens only. And that's why we love Augur. It's because it's a live protocol. And once it's live, it's kind of alive forever. Obviously, you need good token economics to create an incentive, but we're a much bigger fan of that model for very kind of high-risk investments like crypto.
So, not meaning to put anybody on the spot, and we'll talk about this again when we talk about some individual projects, but how do you contrast Augur from ZeroX, let's say? Both had tokens.
Without throwing insults.
Just objective is...
We just prefer Augur's economic model to ZeroX's.
And do you mind mentioning a couple other models that are similar? Maker, for example?
So one that we really like also is Erasure or Numerai. We like that model. And then another one we like is Synthetics. Those are just some examples.
Great. Any more contributions here? So, if you're a project that's new and self-funding and ultimately trying to get funded, you do need to consider how VC addresses this thinking. And then for me, it was like going back to, if one of the raison d'etres of crypto to begin with is to use financial incentives to be good actors in a system. So incentivized game theory being core to crypto, then of course you can say, well, is it really core to crypto? But miners, are getting paid to do mining. That's the security of the system and stuff like that. Can projects develop without a profit motive? And how and for how long? And I think we're at this time right now where pretty much every project I talk to, and certainly almost every DEX, is zero fees, right? You have to pay your gas fees, but you don't have to pay anything else. How do you get to the next stage? How do projects that start with a zero-based revenue model end up changing and then fighting that other trend that says, margins are going to trend to zero? So where's that point cross, and does that point cross at a point where you can actually make money? Network effects, altruism, greater good. We had to build this because we needed it ourselves. So those are some of the things that I like to think about. Give me something back. Sure.
So I would say, I guess, you need to differentiate whether there are certain actors that make money in the system. I think that's crucial. And like for a token model, like for example, Augur is interesting because there are actually cash flows that you can attribute to the token, and the people or the organization that develops the protocol might not make revenues themselves, but I guess they would participate by the token value that's increasing. But one investment that we are just closing off, they would continue to, or they at least they plan to keep their part of their tokens indefinitely and participate in running node infrastructure and basically make cash flows on an ongoing basis.
A coupon. The token becomes a coupon.
Yeah, but only through contributing basically, services to the network.
Real utility into, which I think was kind of the goal and inspiration for a lot of projects. Well, some were just to raise money, but some were actually to have sustainability.
And I think one other point regarding like how much should you raise, I think it's becoming more healthy that you would raise more along like basically a staged raise as in traditional VC terms, that you have maybe a 1.5 years runway and you are forced to deliver, and you basically test certain assumptions and then you see at the next stage whether it makes sense to continue that funding. I think that's quite healthy.
Yep. Cool. There's some more comments.
As you're talking about sustainability and ROI, I think it's interesting to look at what you can do with smart contracts and the ability to limit capital gains of individuals within networks. If Zuckerberg started Facebook and was limited to 2 million quid and then the rest of his shares were redistributed back into network, is that interesting? Is it interesting to limit investors to 10x? So
Redistributing tokens and airdrops and network airdrops.
And set that as the rules from the start, because if you do that, maybe more people will be interested in network and you won't get Peter Thiel putting in $500,000, taking $1 billion out. Is that good for society in the end?
So I would say that, part of that is somewhere between altruism and the greater good. Like if you love to bet on sports and you're not able to do that, then you might support a crypto network that enables that because you get a profit from that. The profit you get is that you get to do the activity that you like. So I think we're, not struggling, but I think we're embracing all these things at once right now.
Yeah, so on this kind of giving back, on this giving back angle, I think referencing, people providing services to the network participation. If you want to run a masternode, obviously you're helping the network. But I think when we look at a lot of projects, at least in traditional finance, you would start with this kind of going concern that the business is not going to go bankrupt. And I think we kind of have to almost make the same assumption when you're looking at a token project. You almost have to assume from day one that the network functions and there is a viable number of nodes in the network. So insofar as you think about, this person is making profit from it, I don't think you can really think about it in the same terms. I think a functioning network should be a given when you're assessing a business.
Right, and so that functioning network to continue to run a node or to report on markets or to be a validator or, have a say in governance, at some point a project has to either stay centralized and, put both feet in there or become almost a DAO. And I think there's a good article, and I'll have speaker notes if anybody wants them afterwards, but you do need to pick a point where you're going to stay in one camp or the other, at least evolve to that. Right now, I think there's enough time and space to decide what that model, might end up being. But how do you know that in 3 years that this project is going to be able to sustain miners or when, you know, Bitcoin 21 million is mined, what happens next? Like, we haven't seen it. We don't really know. We're hoping that enough value accrues so that projects can hand off to the users, right?
Yeah, I agree. And the other thing is, obviously, you're increasing the coin supply with all of these rewards. So, you know, is there enough utility being created in the process to prevent that just from evening out over time?
And I don't have an answer to that. I think it's too early for us to, you know, really know what the answer is. We can predict the answers, I guess. But I think it reinforces how early days this all is. And, you know, extrapolating that to the price, you know, financial incentives being core to crypto, 10,000 per Bitcoin is definitely not the right price. It might be zero, it might be any other price, but it just seems very, very early for where we are right now. So some of the things that are taking longer than we thought, software dependencies. I think one of the bright spot right now is how good the code auditors are and how seriously they're taking the work, seeing what the stakes are for mistakes. But writing complex code is really hard. Crypto without textbooks and stuff like that, you're kind of exploring on your own. You know, where things end up. Augur is, you know, an example I like because it's got a resolution system, it's got an on-chain trading system. There's a number of protocols all being combined, and, you know, we'll talk about composability and interoperability. You have regulatory dependencies. I used to think that was one that you couldn't get wrong, but maybe that's not true right now. Maybe you can get that a little bit wrong and then pivot later. Prediction markets, for example, they're able to operate. My experience with InTrade is a prediction market. We weren't able to operate. Why are things permitted now in the crypto space that, you know, weren't permitted? Is it a gerrymandered regulatory arbitrage between countries, like, you know, well, we're not going to allow US users, but we are going to allow US users, or we're in the US, we're not in the US. So maybe you can get that wrong. Maybe you know, can shift over time, and maybe you build that into your business plan. Depends on how much risk you're willing to take. Execution dependencies. I think, and I'd love some feedback about this, but we have a mindset now, if we can imagine something, we expect it to exist tomorrow or no later than next week. And I don't think that's true. I think just because we think that an idea is really, really good doesn't mean it's definitely going to be available to us next week. It takes a long time to execute on these things. And then the other thing, and this is like, you know, the bar chat conversation when you talk to somebody who's not in crypto yet, it's like, oh yeah, it's a really good idea. I appreciate all those potential advantages, but what can I do with it today? And there just aren't a lot of things that you can do with crypto quite yet. So maybe the next big thing is, you know, figuring out where the breakthrough to adoption is going to come from.
Where does Veil fit in this? Because I'm looking at software dependencies, I'm looking at regulatory dependencies, execution, and adoption, but it doesn't quite fit in terms of the recent news about Veil.
Yeah, so I think it does. And
Maybe it does,
this
yeah.
is from public knowledge. I don't have any insight into the project directly, but what I heard or read or saw was that they felt the regulatory squeeze and the uncertainty was what was making things uncomfortable. But I would also suggest, and, you know, we have folks from Gesser here, so, you know, prediction markets, is it the underlying protocol? And, you know, not to cast aspersion, it's really complicated stuff, but, you know, maybe the trading experience isn't quite good enough, and I'm not worried about the regulatory yet. Maybe Veil put the regulatory thing first. Not sure. So a lot of discussion now about UI and UX. Dharma, I think, is really interesting, having a major pivot. I would like to say that Dharma has made a choice now to be in the UI business. So there's existing protocols, and now we have this unique time where we can put a few things together. Oh, well, this is back to Augur, right? The idea conceived in 2014. A couple of survivors left, still building on top of Augur, hoping for V2 in April 2020. So all this stuff happened, and then the price, went to the moon, and then, we're here, and it still isn't really great yet, but getting there. Lots of inspiration for it still. And then talking about Dharma and composability, we're seeing the term Legos being used a lot. Some of the benefits, and this goes back to some of the software dependencies. The tooling is good for a lot of these projects now, and they're tested and kind of run through ringers. You can compose things. Why reinvent the wheel for every function or feature that you're going to add when you can compose? You can compose identity, you can compose matching engines, you can compose staking, you can compose interest, you can compose conversion. There's lots of things you can combine. And then the risks, and we've never done this stuff before, so we don't know. The earth is flat? I don't know. Untested tooling, and not the fact that compound works, but the fact that does compound work when you've got 3 other things that are feeding into it, or that compound is feeding to 3 other things. From a margin and risk perspective, talking about trading and CDPs and Maker, maybe there's waterfall effects that we haven't seen. We did see crypto go, or ETH price go from 180 to 90, back to 350, down to 165. And what if there were a ton of risk and margin in the system? So the question for me is, can these business collages make money? Can they survive? What are the defensible moats? And I wish I had the answers, because I'd be putting my money where my mouth is. Is it anything more than trading right now, or is it anything more than network effects? I don't know, but I'm seeking feedback about that. So this was an image from NFTY issue 56. These are kind of all, overlapping, interoperable, where this thing works with that thing, composable, where you can take 3 or 4 modules and put them together to make something better than, or more fully featured. And then extensible is where you have, some core and you can modify it yourself. And picking the right amount of work to do, with your own thing and combining it with things that exist, I think that's going to be really important for builders coming up. So it's how to play nice with things that exist already. And then going back to the theme of compromises, how much decentralized do you need, or how much centralization do you need? I think Compound is pretty explicit in saying that we run the Oracle and we're setting the rates and things like that. How much trust should we be giving these projects right now? Is it too much, or is it not enough? And there was it's in my notes, but there was a great article about the spectrum of decentralized to fully centralized and going everything to DAOs. And then thinking about altruism and capitalism. When we look at projects now, if it's got a deferred revenue model, is there a trigger that is going to allow a project to go from 0 revenue to some meaningful revenue? What does that depend on? Does it depend on more adoption? Does it depend on an easier using experience? And then when will investors start to make money? Feedbacks? So if we talk about any specific projects, just want to stay with the spirit of what the organizers want. Good discussion, a sense of humor, spirited debate, but not really trash talking. So maybe the combination of interoperability, composable or extensible, is it okay to be somewhat centralized here, or does it have to be fully DAO? Is the business going to make money? Is it going to be around? And what's going to come next? So any Uniswap experts in here? Someone must use Uniswap. Great. Tell us what your thoughts are about Uniswap in terms of any of these things. Like, are you a fan, not a fan? What do you like? What don't you like?
I'm a big fan of Uniswap, and I think that it's one of the most used Ethereum dApps. And What I like about it is that it's pretty simple. It could be embeddable everywhere, and at the same time, it gets some big traction, and a lot of people are using it. Most of the things are on chain, which is amazing. I mean,
Is it sustainable?
I think it is for now. I mean, not that much, but they don't have many. They just made a smart contracts, and everything is on chain. They don't pay taxes for servers. They just made some simple updates from time to time to the protocol. So basically, it is self-developing system.
Yep. A lot to be seen in the future. Like, we don't know how these things are going to end up. Uniswap doesn't collect a fee at the moment. It pays fees to the liquidity providers.
I think that they have some small fee, in fact.
Oh, okay.
I read that they are also doing some arbitrage business model, or they are studying that. I read something about that.
Yeah, I mean, it very well could be, and I think that's really the point that I'm trying to make is, to evaluate the business, it's not necessarily, and this is, hard for me to grapple with after reading, Ben Graham or something, but do you have to make money now, or, how willing are you to not know how you're going to make money if you ultimately are going to make money? Is there a path to ultimately?
From an investor perspective, I spent quite a bit of time trying to understand how an investor could take exposure to Uniswap as a potential investment. And I couldn't really get there because it's an open source smart contract. It's out there. It doesn't generate revenues. There's no company, at least at the time, there was no company behind it. You couldn't take or buy shares in the company developing Uniswap. There's no token.
So can I push a little?
Sure.
So have you used it?
I have used it. Yeah,
It's amazing, right?
Yeah, it's amazing.
Yeah.
And so as an investor, I'm scratching my head because we've got these amazing tools that are growing super fast, and everyone's using, but you can't get the upside of it. So now, I mean, then he created a company and he raised money, and now I don't know what his plan is, but perhaps he's building some services on top and monetizing.
Red Hat, Linux, kind of.
What is it?
What is Uniswap? So it's a pool that it's called a constant product market maker. So you start out with 100 of these things worth $1 and 100 of this token worth $1. And then when new participants come in and remove liquidity from one side or the other, the price changes as long as the total product of both assets stay the same. It's pretty cool and very different than an exchange, with an open order book, for example.
So one counterpoint to what Yannick said is that even though you can invest directly in the project, there are a lot of arbitrage opportunities because the automated market maker means that the price can really change from the price of the asset on Uniswap versus the price of the asset on other decentralized exchanges. So you could, that would be a way to invest in it, and it goes back to active participation in the network where you're providing that arbitrage service.
Right, so stay with that point. So if you're making that counterpoint to Yannick, he says, okay, but how do I make money?
So you would have to be an active trader where you would run those arbitrage bots and then do all the gas auctions.
Right, so it's great for traders and risk takers.
Yeah, so maybe not for a venture investor, I get that. But then again, a lot of venture investors are exploring generalized mining as a strategy.
Right, we can do something with it, we just don't know what and whether or not it's profitable.
Also, it's questionable how much money you can make from it. And generally, I think for Uniswap, the sustainability, if you do any large orders, the slippage is too big to be interesting.
Right.
So there's that as well in terms of sustainability.
A couple more projects, and I think we have about 3 or 4 more minutes. ZeroX, I think we touched on it before. I'm grateful to have met the guys from ZeroX. It allowed Paradex to, build the exchange that we built. The tools, here's the price. It's zero. In fact, we'll give you a grant to develop on top of this, which is amazing to start with. And the tools and the team are unparalleled. But, for me, sustainability and evolution is really important. But I can say, at least from my perspective, they haven't stopped for 5 seconds. So feel good about it. Not sure, where the token goes or if that matters, but grateful to have those tools.
I'm curious for your thoughts on liquidity and whether that can be a moat for a protocol. And especially in ZeroX's case, liquidity is huge. When you're talking about slippage or anything else, that's a real reason why you would go and trade in one place over another. And if you have that moat, even though everything is open source and can be copied, the liquidity doesn't transpose. And if that is the case, can you, there's a token, the token economic model could be changed. You can make a reasonable argument for extracting value out of that.
Yeah, so two comments, and these are my own feelings, but I'd love to hear more from others. But the traditional exchange business, they've always paid market makers to provide liquidity, either with discounted fees or actual rebates, and that was a business model for many. So that's really not reinventing the wheel. For ZeroX to find a way to incentivize liquidity, it is its own network effect, chicken and egg. You need the liquidity to get more users, therefore more liquidity providers. And so to pay them, it's almost like staking in a way. You're going to put liquidity there as your stake because you're going to get a rebate and then do more volume, and you're the best connected, market maker and things like that. So I think those things are possible. But if you contrast that to the need for a token when someone else can just push a couple of buttons and then copy the entire protocol and then change that fee, is that a race to zero that's destructive or helpful?
So what I meant was, if ZeroX gets to scale and has an enormous amount of liquidity, and I think you can see some of this with Tether, which many people might argue is not the safest stablecoin that you can have, and they might not be culturally very aligned to it, but it's like 80-90% of the volume. It's the base pair for the most assets on the most exchanges, and therefore you just trade with that, and that's it. If you can get to those kind of liquidity effects in ZeroX, the point or the question I had for you was, does that mean that ZeroX have value? If you come back to the investor's perspective on investing in Uniswap, if you're going to invest in ZeroX, here you have a token that you can buy today. I think last time I looked, it was a governance token, difficult, but over time, can that model change?
Well, that's really the point, right? The model as it is has to change into something else, because the model as it is right now doesn't provide a return on investment for owning that token. So as a VC or an angel, thinking about investing in that token or that project, is there a path to ultimately having a sea change such that it's valuable to own the token? I don't think we know yet. It depends on the governance and the voting and stuff like that. Compound. I think Compound now might be the protocol that has the most building activity on top of it. So I think it's really interesting. And to me, what's even more interesting is that, for a real DeFi kind of nerdy group, it's gotten a tremendous amount of acceptance and support, and it's got real centralized kind of aspects to it, at least for now. So it's one of the projects that's saying, ultimately, we hope to give this to the community of users, and the users should get enough benefit from using it to support it. Hopefully Augur is similar. They don't have unlimited money. And then one of the big dependencies is the Oracle problem, and I wonder if that's a potential profit model. Maybe that's the way, Compound changes from a social good or a business good for others to use. And then this was a great little tweet storm about the guy from SpankChain saying, hey, I've got a bunch of money in our treasury, and responsibly we want to earn ROI on that. How about this Compound for 10% on our DAI? Dharma talked about it, didn't use a fundraising token, and can you make money from being in the UI business, and how much wider does your UI have to get?
So I wanted to ask about that, because are they in the UI business, or are they just a provider of interest rate swaps? In that case, they're like a finance company, right?
It's not their own protocol now. So you might say one of the modules of composability would be UI, right? Yeah. Whether it's onboarding or the ability to connect effectively to a wallet or something like that. But the special sauce they've made so far is beautiful UI and putting in the connective tissue. My question is, if that's part of the UI and they're not using any of their own smart contracts, is that enough?
But so as far as I understand, they're using Compound, which has variable interest rate, and they're providing fixed interest rate, and so that's the service as well that they're providing, right? And taking on that risk and taking on the calculation of what should be the premium.
And that could be, and I don't know that they've announced that yet, or have they?
I think they have, yeah.
Yeah?
They said they would launch it. They would have it launched.
Yeah. So I think this is even very questionable because it's very hard to calculate these type of rate swaps. And so that's the service they're providing as well to some extent.
That's worth it, and
very risky for them.
Risky for them, and how what's the fee for that?
That's their business model, right? Their business model is variable right now. The business model is variable right now. They may be working on fixed, but right now you go on the website and it says
whatever Compound gives.
They're lead gen for Compound,
yeah.
right? So whatever Compound gives, they deliver.
Not that lead gen is a bad business.
No. But I was going to go back to sustainability because you keep talking about it, and I think that's the key point for everything in this market right now. There's three ways you make money in this. You have traditional rent seeking, which the DeFi industry seems to shy away from.
Terrible.
Right? Web 2.0's traded dollars for dimes. You could trade dimes for pennies if you wanted to. That's one. Number two, there is beg for money, a la Wikipedia. Every year.
There's a nicer way to say that.
And then number three is a token-powered network, and the best token-powered network out there is Ethereum, and I'd still say that it's still questionable whether it actually works in the long run. It's a big experiment. It's a really cool experiment, but I don't know. So it seems like they could flip on rent seeking at some point if the industry would ever kind of gravitate towards that and could make some money from that. Every one of these could have some type of rent seeking even if it only was pennies, and then see how the token-powered networks play out over time.
Well, I think that's part of the interesting aspect of interoperable, composable, extensible is that if you're willing to sacrifice profits on 3 of the 4 modules, but make all your money on the 4th, can you get enough scale just with the 1 to give away the other 3? And maybe someone else is working on the optimal experience for just the 1 module and giving away a different 3? Anyway, I don't have conclusions about it. I'm trying to figure it out for myself, actually. Argent is fairly new to me. I was only introduced to it in the last 10 days or so, but also putting together lots of different functionality in a beautiful wallet. So something I'm keeping an eye on. And the takeaway for me is the main functionality of wallet the optimal entry point to do things on top, right? It starts with connectivity to your funds in a financial system. And maybe that's a great way to get started and make money with all kinds of things behind it. Running out of time, Instadap, very similar, very young, engaging, accelerating project. How do they compare to Dharma? What's their ultimate vision? Just things I'm thinking about anyway. The protocol bridge, is that really just arbitrage? And are we back to trading again? Hummingbot versus Instadap. And then the smart contracts that make Instadap, is that enough secret sauce? Is that enough of a moat? Augur, not going to pound on that, but a lot of the questions and considerations I think about a lot because it's still near to my heart. We've used the time, and just a few minutes for Q&A if we have any. Yep.
In terms of just real-world applications of all these, different technologies, I'm not deeply familiar with everything, but I mean, it seems like the crypto markets, a lot of these things are based on the premise that they'll be trading and people will make money off transfer of value from one to another.
Yep.
Right, and then you're building the plumbing for this. The crypto markets aren't very deep, and Bitcoin dominates the markets. So, in terms of who gets utility out of all of this, it's great tools, fun to dream about, but what's the real applications? Where do you see that? Because I think ultimately this is the million or billion-dollar question, right? What are people going to do with all these great tools that crazy developers are doing for free half the time, if not more, showing that everything's possible? Okay.
So maybe that's the setup to end this topic, because I think
Where's it
we're
all
over
going?
time. So
Right.
one quick answer might be, what is the value of a new kind of money? That's all I got. Thank you. Thanks, everybody.